Hey, good Thursday morning, everyone. Hopefully, you are sitting in a good situation this morning. Oh, wow. What a ride yesterday was. Uh, and, emotions. Um, I've learned it the hard way. Emotions drive your decisions, and don't let that happen. And don't use your emotions to trade, because your emotions will be wrong probably every single time. At least in my case, it's been that way. But anyways, with that being said, the markets took a tumble yesterday after some slow movement and indecision, and the Russell was the only index that was kind of green for most of the day. And then to put it bluntly, they took a shit in a box big time and dropped as they flushed the last 15, 20, 30 minutes of the day yesterday. So hey, some of that on the Fed news, but what we've been talking about for the last week or so is that this was coming. The technicals have been telling us. I mean, the people in the media were telling us that it's all the stuff in Afghanistan and the world, and yeah, some of that stuff may play a part, but this market's been way overextended. The question is will this be a buy the dip opportunity? And is this going to be just kind of temporary, a few day flush, and then we're right back to the bull market that we've been used to? So anyways, let's jump into this here video today. And I'm Rick, the host here with LMA Trading, and I am not a financial advisor, and I do not give financial advice. These videos are strictly for my personal trade journey and also part of my trade journal as I discuss the markets to help review and plan my day. Now, with that being said, I trade my own money. I win my own money and I lose my own money. I'm an older trader, so I'm rather risk adverse. I do not like seeing red on my chart. I do not like seeing this. I'm strictly a trend trader. I trade the trend, and I would much rather trade an uptrend than I would a downtrend. But nonetheless, I heard a interesting stat yesterday that out of all the times the market sees on average of 5% correction, and that only happens like 12% of the times, which means that 88% of the time we get less than a 5% correction. So, down a percent or two yesterday, we're maybe a percent or two today. So, we may have a little more to go. And if we get more than a 5%, then I think we'll probably see a push down to possibly a 10% correction. And, but, I have to stay positive. I have to figure out how to stay positive on that, because, this just becomes a great buying opportunity when we find the bottom of this, of what's going on here. But anyways, so let's jump into my charts and let's take a look, and we'll start with the Dow. And the Dow is, as you can see here, has took a pretty much crapper as of yesterday, and isn't looking all that solid, and that's kind of what I would probably suspect. And we are sitting 317 down 317 points here this morning. So the expected move is 345 points is the expected move on the day. So we will probably get that and then some, most likely, is what I suspect. We're still not back on the long-term trend. We're not back to the 21. So as you can see here, about every month and a half or so, we get a pretty decent little flush. So this is just the I think the normal flush that we see after this bull market. It has to come down. Stocks return to the mean, and so that's what they do. So that's just if this is a reversion to the mean play, we'll see. Let's go ahead and jump into the Russell. The Russell kind of was toying with us a little bit yesterday, but it's taken a poop or two in the crapper. We've been playing the Russell to the downside, so that trade we took. Here was the stupid thing. I took the trade off the table yesterday. I took the trade off the table. We got the moves that I was expecting, and so we took profit. Um, oh gosh, what did I leave money on the table on that one? So I would be, probably on my one put here with the flush that we got yesterday. Would have added, several $100s per contract. And then with the flush that we're getting here this morning, if this continues into the cash session, um, yeah, I didn't follow my own advice. That's why I do these, so I can sit here and smack myself in the face. Um, so listen, I need to do a much better job of listening to my own advice, not let the emotions play, but and make sure that I'm trading my plan. And so, um, and then on top of that, we do play things to the long side. So we picked up a couple of credit spreads, and of course those are in the shit crapper too today. Oh well, you know, we'll just make it back. We'll make anything we've lost. We've given back some of our profits, but at the same time, this might be an opportunity. It's just got to evaluate and see, do we go ahead and put something on the queues and like maybe a put debit spread or something, or a call credit spread, something on the queues to, and maybe back on the Russell and everything, because I think the Russell's going to I think the Russell's going to go is going to head down to the 2100 or the 2000 is where I think the Russell maybe, so that's where I think it's heading. So we will we'll we'll see before we get the bounce up. Now, with that being said, let's move on to the S&P. The S&P, do you see kind of a theme here on these charts here? This is the 4-hour chart. The VIX took a spike up towards the end of the day yesterday. Let's see, and so it took a spike up at the end of the day, and basically it went from like 18 to over 20 and up to 21 in a matter of about 10 minutes, 15 minutes. I sat there and watched this, and I saw my SPX credit spread go with it. I was just playing a very short income play. I was able to get the credit I was after. I was after a 1-to-1 and on a $5 spread. So I risked $250 a contract to make $250 on the credit. So we'll see. We'll see. Right now it doesn't look very favorable, but in this market, anything can happen. That's what we've learned. So let's turn around and let's take a look at the Qs. Kind of a similar picture. Everything looks almost identical, candle per candle. And I think the Qs probably have a huge flush to the downside. I think we are going to probably test, go to the 21, and probably test the, I look to the Qs possibly getting down to 14.5, and possibly if we break the 14.5, then then I think our next area will be about 14,000, roughly 14,100. If this to the downturn continues, all the indicators indicate that we can probably, there's lots of room for it to go down there. So, and it doesn't really show a whole lot of signs of I think maybe at the open we might see a little bounce, and that would be good. On the 4-hour chart, I'd like to see a bounce back up to the 21, and then from there, I think we'll flush and probably go down. I guess you can say that's kind of what I'm looking at, and so that's kind of where I'm at here. Let's see. Let's take a quick gander. The bonds are kind of holding tight, and you know, kind of wondering what the FANG stocks will do today. Let's see. Apple. Let's see where Apple's at. Apple's looks to be open a couple dollars down, probably about $2 down. That its expected move is right around $2.60, and we're already there. Most of these moves are probably going to be bigger than expected, and so we'll see if this can hold. I think there's still some more downside to this, but Apple was the one that was when the markets were down earlier in the week. Apple was the one broke out of this flag pattern and pushed to a new high of 151.40 or 151.68, and so that's kind of Tesla actually regained some of its ground on that push down, and so it flushed down at the end of the day, and it's actually still it's down. It's going to open down here this morning, so I don't know. Actually, probably on the chart wise, looks like it might be one of the stronger charts, but holding up a little better than some of the others, especially if we look at this, if we look at the weekly chart here. And so, but I think we're still going to get a flush down if this still runs. See, I added a spread on Crocs yesterday. The reason why I did that right before the toilet plunger got flushed down the toilet. But the reason why I did that is Crocs has a tendency to hold up pretty strong when the markets do not. As you can see here, the markets, tanked this week, has been really on a roller coaster, and Crocs has been relatively strong. And as you holding that, 1 ATR as the markets were down, pushing on to new highs, but then we got the flush, here yesterday down, and then we got in right here, and so I'm sorry, where is it? Yeah. So yeah, it's probably looking at, let me switch this here. Other chart. There we go. So Crocs is looking, like it may, obviously it's going to open down. I'm kind of looking at this. The first time I've looked at this chart since yesterday. So just kind of soaking it in like a sponge and saying to myself, why? Anyways. All right, guys. Well, we've got some logistics to do. We got some planning to do. We got a few things we got to look for here. This is, as I said, this is part of my trade journey. It's not pleasant sometimes as I sit here and look at these things in my mind, and then I lose my thought. It's an emotional game, trying to figure out the game plan here for today, whether or not to add on some other, to put my shorts that I took off the table yesterday, to put those back on. I don't know, an idea. If you're listening to if you're listening to this and you listen to it by this point in time, would it be, because here's my thought. My thought here is if I put on a hedge and go take the other side of my long positions, and there's the potential that in this market has been buy the dip all the time. You know, will the bulls come in and start buying here today? Um, will the bulls start buying this stuff up because everything's on sale and push the prices higher? In other words, they will stop the descent, um, and begin to push on to new highs. And then, of course, you'd be on the other side of the trade. So I don't know. I've only got about 2% of my account at risk. So at any given time, at max is my trading rules are like 5%. So like I've been saying, be cautious, size in accordingly, and I've been doing that. So it's just that I wish I left my hedges on a little while longer, and because they had time, and I could have done that instead of just taking some money off the table. But oh well, it is what it is. And so probably like many people, people are going to be on damage control today. There's probably some accounts that got blown up. I'm sure. The shorts are having a heyday. So we may be putting in some short squeezes. So I would definitely be looking for those good opportunities as this begins to flush out, and as the momentum to the downside begins to slow down and we start seeing some exhaustion in the selling, then we'll maybe start seeing a push to the upside, and we will squeeze some of these shorts out, which will then push prices higher. That's wishful thinking. And the point of it is that it will happen. Will it happen today? Will it happen tomorrow? I really think with tomorrow being monthly option expiration that we'll probably see more downside to come, and then possibly in the Monday, and people will get margin called and over the weekend, and we'll see probably a flusher through Monday possibly. So, okay, guys, happy trading. Make be safe out there. This is war, and there is a lot of blood on the playing field. So, have a great day. Have a good Thursday. Happy Thursday, everybody. We'll talk to you tomorrow.